Good afternoon, everybody, or morning. Welcome back to the Opportunistic Trader. It is 11 a.m. and we're joined by Ed Meir of Commodity Research Group. How's it going, Ed?
How are you, Michael? Nice to be with you again.
Yeah, absolutely. You've joined us recently talking macros and metal, and we've earlier in the week we had Andy LeBeau from Commodity Research Group talking about the oil side, and then last Friday we had Ben Ryan, who works with you guys, talking about options and metals specifically. Thank you for all the commodity research info on the Opportunistic Trader.
My pleasure.
So a lot going on. Let's start with the metals.
Yeah.
Gold is trading at 1233.90, but the bigger story is, I guess, a number of the other metals, like the more industrial metals, like copper, up 3% today. What's going on in the metals the past few days?
Well, not surprisingly, all this has to do with trade. As you know, that's what sparked the markets yesterday. We're seeing a bit more of a continuation today in the metals. Basically, there was a tweet by Trump yesterday saying that he had a very good dialogue with President Xi of China. More importantly, the Chinese also kind of reciprocated. They told a visiting congressional delegation that they want to get relations back on track with the U.S. They're looking forward to it. They want to lower the temperature, so to speak. So a lot of good stuff. And then this morning there was a Bloomberg report saying that Trump actually wanted to have some concrete proposals to go over with President Xi when the two leaders meet in Argentina later this month. That kind of sparked another rally in the base metal space. Stocks, U.S. equities also opened higher. But then that story was denied by the White House, so we have sold off a little bit. Although base metals are holding up firm, they're clearly the winner over the last 2 days across various asset classes. I mean, we've had as you mentioned, a big 3% surge in nickel. Aluminum has bounced back. And 3% surge in copper. Nickel has bounced back. So has aluminum. So the trade issue is very much driving it, as is the fact that the Chinese are understandably alarmed about the growing slowdown in their economy and are rolling out practically every week. They're rolling out a new kind of a stimulus program, be it on the monetary side or on the fiscal side. So metals are teeing off both of these variables.
Which metals have been performing best over the last week, and what do you think going forward has the best chance to outperform?
That's a question I get often. We usually find that they kind of move together. One might start moving a little earlier than the other, but they're all very China centric. China consumes or produces about 50% of all of these metals that we follow. In steel's case, it's somewhere like 70%. So, it's really a China play. But within the six LME metals we follow, copper, aluminum, zinc, lead, and nickel and tin, um, we think the fundamentals for nickel and aluminum look pretty good, mainly because in aluminum's case, there is a lot of pressure on the cost side. Alumina, which is what you need to make aluminum with, is very tight, and that's lending an element of support to prices. And demand is, aluminum demand is always very strong. In fact, it's the strongest of all the base metals. It grows by the most year in and year out, roughly about 5% globally, whereas some of these other metals grow by about 1 to 2%. So I think aluminum looks good going into next year. Nickel also with this electric vehicle story, although it's several years down the road, there simply won't be enough nickel to supply all these batteries once we get, into the sweet spot in terms of demand.
Yeah. Now, we have the election coming up, midterm elections coming up on Tuesday. How much of this do you think is real progress, and how much do you think is just talk pre-election?
What I think is, I think the two leaders will agree to talk. I think that's what will come out of this meeting in Argentina later this month. the issues are not going to be resolved over, one photo op or anything like that. These are really thorny, difficult issues. They need to be negotiated over months and months. They need to get into the weeds, so to speak, and figure out some sort of a compromise. So I think if the two leaders agree that they'll send their teams to, I don't know, Geneva or somewhere like that, and just closet them off for 6 months and let them hash out all these fundamental disagreements, I think the markets will be very impressed by that and will react accordingly. Because this is not a question of buying more cars or buying less laptops or whatever it is. These are real fundamental questions about how the Chinese economy is actually structured and what the US objections are to that. So I don't know what the answers are. There may not be any answers. So, the whole thing might just fall apart after months of talks. But for now, we have to take it day by day. And I'm hoping, instead of sort of the whole thing falling apart in a round of name calling, I'm hoping the two leaders will agree to start real serious talks. Now, with respect to your other point, the elections, that's a real wild card. I think the markets are kind of discounting the Democrats getting control of the House, but not the Senate. I think that's sort of a base case, in which case, I don't think there'll be much movement in most of these markets. I think if the Republicans do much better than expected, stocks could rally, the dollar could rally, and gold might be under pressure. Conversely, if the Democrats win a sizable majority in the House and get close in the Senate, or maybe even win the Senate, you'll see a big downward move in US equities, and gold could move up, and the dollar will likely move down. So, but it's hard to say. Nobody has ever modeled a political election to markets, and I certainly am not trying to do that.
What's your take though on the recent dollar move? For dollar renminbi, and just the dollar for the past 6 weeks was grinding higher, higher, higher. But it's such a small move. G10 vol was at such a low level. Now the past 2 days we've seen dollar weakness, albeit now today it's not a
Yeah.
whole lot going on.
I mean, if you look at the dollar strength, it all happened second half of October mainly, and that was when we had this talk of President Trump imposing a second round of sanctions on the Chinese. So from my view of the dollar, and again, this is very short term, it seems to rally every time there is trade tension, unease, and it seems to come off when the temperatures cool off a bit. And that's certainly what happened over the last 2 days. So it's sort of moving with tariff talk as opposed to anything else.
But do you get the sense that if the more progress that is made between U.S. and China, that's going to be good, bad for the dollar?
Yes, the more progress being made with the, it's perverse in a way, but the more progress they make with the Chinese seems to be bearish for the dollar. That's
What
correct.
do you think it would do for U.S. yields?
U.S. yields, hard to say. I mean, US yields are, funny enough, they've kind of moved up in October despite the stock market losing trillions of dollars of value. Usually don't see the two correlate like that. But I think US yields are sort of in their own world right now. I think they're moving progressively higher because the Fed is showing no signs of backing off. I think we talked about this last time. I think the Fed needs to raise rates as quickly as possible so that they can lower it once we get into a slow growth or a recession mode. So I think they need to raise in December, they need to raise again in March and June, and then maybe stop and see. And by then the economy will be slowing down, and then they can bring rates down from, let's say, I don't know, 2.5%, 2% back down to 1 or something like that.
Yeah. It's an interesting correlation, and like you said, the dollar. I think that dollar renminbi has been one to keep a close eye on, because I think that's almost now a broader dollar basket, almost more so than even just let's say the euro, which in the dollar index itself, the euro makes up over 55% of it.
Right.
But
No, the
Aussie.
renminbi is interesting. I mean, it's down about 7% this year. So the Chinese have basically offset this 10% tariff hike almost completely by depreciating their currency. So you could make the case they're not any worse off, maybe a little bit worse off. But what the tariff thing does, it tends to gum up all the supply chain. So you have uh, businesses basically freezing in place, not knowing whether they should build a plant here to export to China, or vice versa. So it kind of casts a chill on business spending. And in fact, the recent GDP numbers showed that business investment was basically flat this past quarter after increasing nicely last quarter. So I think you're starting to see the impact. This tariff thing really needs to get solved. I think it's really weighing on business investment more than anything else.
Yeah, I think globally, as a matter of fact, all
Globally,
over the world,
definitely.
because what's happening with U.S. and China, a lot of people are unsure globally what exactly is next with global trade talks.
Right. What could be interesting about the elections is nobody is really talking about this, but the Democrats, if they control the House, they could possibly introduce a resolution restricting President Trump's ability to impose tariffs. People tried to do that earlier, but it didn't go anywhere. So it'll be interesting to see if, with the Democrats in charge, if they could push that through, because legally the president can kind of do whatever he wants on tariffs. That's his sort of personal sandbox. So it'll be interesting to see if there'll be some resistance to that from Congress.
Yeah, absolutely. What's your take on gold here?
Well, you talked to my colleague Ben Ryan about it. I think I listened to your podcast, which I thought was really good. He was friendly to gold. I would suspect that I'm probably the same way around. I think the stock market sell off is probably not over. I don't think we're going to retest the lows, but I don't think we'll have a V shaped bounce. So, gold could benefit a little bit from that. More importantly, if we get a breakthrough or some progress late in November with between Trump and Xi, the dollar could come off a little bit, at least briefly. That could give gold a bit of a move. Technically, this 1240, 1245 level is key resistance. So we need to really take that out if you're going to get some of these funds starting to come in. So if you're trading it from the charts, I would probably uh, I'm inclined to go long if we take out that resistance at 1240, 45.
So if we take out the resistance at 1240, 45, that's the sort of thing. What do you think is
That's a
driving
breakout. Yeah.
gold? Yeah, but what do you think is driving gold in the short term? Is it the dollar? Is it China? Is it Venezuela? Is it what number of factors? What's moving gold these days?
Well, gold has been a big disappointment. It's been hard I mean, during September and most of October, it just was stuck in a $30 trading range. Nothing seems to have been moving it. You have all these variables breaking out, and then nothing happened. I think it finally lifted a bit in October because the stock market, instead of having one sell off, had a series of sell offs. And usually we see gold react to protracted equity weakness as opposed to a one off correction. So I think that helped. The stronger dollar didn't really impede it, but what really gave it a boost this past week was when the dollar kind of sold off this over the last 2 days. Physical demand is good on gold. Indian demand is picking up, Chinese demand is picking up, so that's helping. Um, but it's a bit of a forgotten story. People seem to people seem to trade things that are moving. And gold, you don't want to have a position long or short when the thing moves, $30 over the course of a month. It's just not worth the risk reward of being in. because you're not going to get any bang for your trading buck. So gold is a bit forgotten, and I think, like Ben said in his podcast, once it starts to move, it'll start to attract more interest, and we'll only start moving if we, at least technically, if we break out of this resistance around 1245.
Yeah, I mean, it has been stuck for quite some time, gold.
Yep.
It's, near the upper end of the range. Gold's back down a little bit today. I think yesterday had some people excited again, but, not much follow through as of right now. It's just
No.
interesting to see what kind of catalysts are moving gold because, yesterday it was a pretty decent dollar sell off day. Actually, it was a good dollar sell-off after a number of
Yeah.
small up days. The pound was up 2%, Aussie was up almost 2%, Kiwi up almost 2%,
Right.
and gold was along with that. But
Yeah.
here we are,
You also had a
1244.
good move in gold in October when the Saudi thing broke with Khashoggi, because that was more than a tragic murder. It had wide geopolitical implications, and it finally registered for gold, and that also gave it a bit of a boost. But that seems to have been discounted by now.
Yeah. Yep. Um, any other
So
thoughts? Like, is there any other market that's really, I know you're putting together your monthly piece right now where every month you go about all the commodity markets, give a lot of in-depth research, thoughts for
yes.
the upcoming month. You're actually publishing it probably Monday or so, I think you were saying. So you're going to be
Right.
working hard over the weekend. What are the key things that you're talking about in there that might, be sticking out here?
All right, switching complexes altogether. I'm not a natural gas analyst by any means, but I do follow the market. We are covering it in our monthly report. I think natural gas looks like an interesting long possibility going into Q4, going into the winter months. Inventories are really low. They're below the 1 year average. They're below the 5 year average. We have a lot of gas production, but it's all being used up. Demand is strong, industrial demand is strong. We're exporting a lot of gas. So we're going into the winter with very tight supply. And I'm seeing forecasts on gas for the first time at around $4 to $5 if we get like a really bad winter. So that's on my radar. I'm looking at that,
So
and
what sort of catalyst would you be looking for to get, move, really start
simply
moving?
weather, simply weather, simply weather,
Yeah, I
because
know a lot of other Mark Fisher, Bryn Kelly. They've been talking a lot about natural gas as well, and it's had a
yeah,
good move. We've kind of stalled out here, similar to gold in a way, but their volatility did pick up. Here we are at about 320 in Dece.
right.
Um, is there any sort of so when you say weather, extreme cold? Is that the sort
Yeah,
of thing?
we had it before. If you remember, we had it. I think it was in winter of 17, 18, when we had low inventories. And again in 16, 17, year end, you have a seasonal boost. And this year's inventories are even worse than they were in 17, in 18, and in 17. So I think, you have a shot of getting to the high threes, maybe even four, if you get like a prolonged cold spell. So I'm watching that. I think that kind of speaks to me in terms of a risk reward trade.
Yeah, absolutely. And I guess you could probably structure that through something through options with the help of
Yeah,
Ben, probably.
yeah. Gold, kind of as we talked about it. I'm watching it here. Platinum, palladium are these metals that are used in catalytic converters. They've had a nice run. I would probably look to short palladium at some point. I think it's probably way overdone. It hit record highs just last week at 1140 or something like that. The Chinese auto market is slowing. The US auto market is also slowing, and palladium services both these markets. So a possible short play in palladium. Metals, kind of you go with the flow with the trade talks. And energy, I'm not going to say anything about. Andy covered that quite well. It looks like a sick puppy, though. It just keeps dropping every day, which is quite surprising given that we have sanctions coming up on Iran next week.
Yeah, that's we did speak with that one with Andy in depth, and we were speaking with Phil Flynn before. That's really been a sharp sell-off. A lot of people have been bullish. I know Andy's been more on the range-bound sort of call. He hasn't been
Right.
outright bullish, but we're down 20% or so from the high, and
Sure.
it's been a 4-week move, and so we're at interesting levels here. And once again, that's another question, and I don't know if you have this. I know Andy writes more on that, but is this more politically driven as well? Kind of coming into the elections, it's nicer to have lower oil prices than higher oil prices.
No, I think the fundamentals, I think everybody was kind of going long into this Iran story, and as we approach that deadline, it seems, their exports aren't going to shrivel to zero. They're still going to export a lot of crude. Um, Plus, you have all these other countries ramping up output, and you have big weekly inventory increases here in the U.S., all of which Andy talked about, I assume. So it kind of is, buy the rumor, sell the news type of a thing, I must say I'm surprised. It's quite a sharp move off the highs, and we're down another buck today on WTI.
Yeah, definitely under pressure, and keep a close eye on that.
Yeah,
That's interesting. So we'll definitely be on the lookout for the monthly report that you're putting out. I know you said you're working hard on that this weekend. Keep a close eye on the metals and all the other markets. A lot going on in commodities right now. Even soybeans yesterday. That was a big mover on the China news. It's about 4% higher from that, and
wow, I didn't
so
see that. Interesting.
yeah, I mean that one's the farmers were heavily affected by that one, and that one's paying close attention. I think all eyes are really on that China story, so we'll continue to see how that unfolds and affects the metals. But like you said, copper up
3%.
3% today and was higher yesterday. So
Right.
interesting move. It's the industrial metals that are moving.
Right.
All right, well, Ed Meir from Commodity Research Group, thanks a lot. We'll talk again next week or the week after that.
My pleasure, Michael. Have a good day.
All right, you too.